All right, let's jump right into it. Today, we're unpacking a massive piece of small business finance, QuickBooks payroll and contractor payments. We're going to build a blueprint together to help you navigate those absolutely critical differences between employees and independent contractors. Honestly, whether you're setting up your books for the very first time, or maybe you're just trying to clean up an existing file, this is the foundational knowledge you need to keep your business running smoothly. Let's get started. Right out of the gate, we need to address a super common and incredibly risky myth. Can you just call everyone a contractor to save money? The short answer, absolutely not. No way. You literally cannot just classify someone as a 1099 worker simply because it's cheaper or because you want to skip out on the payroll paperwork. As we're going to see, worker classification is based on actual facts of the relationship, not just what's easiest to click on in QuickBooks. Okay, so here's our game plan for today. We'll start at the classification crossroads, then walk down Path A for W-2 employees, explore Path B for 1099 contractors, outline a 5-step golden workflow, and wrap up with the common mistakes you definitely want to avoid. Let's kick things off with the classification crossroads and why taking the easy way out just doesn't work. Every single time you bring someone on board, you hit a crossroads. The IRS uses something called the control test to decide which path you take. It's all about the actual working relationship. So for a W-2 employee, the employer generally controls how the work is done and handles all the financial aspects. But a 1099 contractor, they operate totally independently. They control their own methods and they submit invoices to you for payment. This distinction is huge. It triggers completely different tax, payroll, and labor laws, meaning figuring out who has that behavioral and financial control is your absolute first step. So let's say your worker is an employee. That brings us to Path A, W-2 employees and managing the full payroll process. When you run W-2 payroll in QuickBooks, you really have to understand the anatomy of a paycheck, and that whole process starts with gross pay. This is their total compensation. We're talking salary, hourly wages, overtime, bonuses, commissions, the whole shebang. The key thing to remember is that this is the top line number, calculated before a single penny of taxes or deductions gets touched. Next up, we have employee withholding. And this is where that gross pay starts to shrink. As a business, it's your job to withhold taxes directly from the employee's gross pay. That includes federal income tax, state tax if you have it in your area, plus their chunk of Social Security and Medicare. Now, QuickBooks Payroll is awesome at calculating these deductions, but remember, the business is actually the one holding onto this money so it can be sent to the government later. Finally, we land on net pay. After you take the gross wages and subtract all those taxes, benefits, and deductions, this is the actual take-home amount. It's the number the employee actually sees deposited in their bank account. Quick pro tip here, before you hit submit on a payroll run in QuickBooks, always double-check each employee's net pay just to make sure it looks right. But wait, there is a hidden piece of the puzzle here. We just looked at the employee's net pay and their withholdings, which together equal the gross pay, right? Well, there's a third slice to this. Employer payroll costs. The business actually has its own share of taxes to pay on top of the employee's gross wages. This covers things like federal and state unemployment taxes, plus the employer's matching portion of Social Security and Medicare. So, when you're setting up a new employee, you definitely need to budget for these extra employer costs too. Now, what if they aren't an employee? Let's pivot to Path B, 1099 contractors and how to handle independent vendors. Independent contractors are essentially self-employed individuals or even other businesses that you hire for a specific service. And you should never, ever confuse contractor payments with employee payroll. Mechanically, this is way simpler for you as a business owner. There is zero withholding. The contractor just hands you an invoice, you pay it, and they're completely responsible for their own income and self-employment taxes. Because the tax mechanics are so totally different, the paperwork is entirely different too. For an employee, you set them up by getting a completed Form W-4, and at the end of the year, you give them a W-2, which is their wage and tax statement. Contractors, on the other hand, you get a W-9 from them when they start. Then, at year-end, eligible non-employee compensation is reported on Form 1099 NEC. You really have to keep these forms straight. All right, now let's pull all this together into the 5-step golden workflow, a totally foolproof system for managing this in QuickBooks. Here are your 5 steps: classify, document, pay, record, and report. Notice how step 1 is classify. Everything, literally everything, hinges on this. Deciding the actual working relationship dictates every single thing you do next. You can't correctly document, pay, record, or report if you haven't first classified the worker properly using those control tests we talked about earlier. Step 2 is document. And if there is one golden rule here, it's this: always collect your paperwork before you make that first payment. For employees, you need their W-4 and employment eligibility sorted before they even start working. For contractors, you have to get a completed W-9 with their legal name and taxpayer identification number, or TIN. Seriously, if you pay a contractor first and tell yourself, oh, I'll grab the W-9 later, you might never see it. And that creates a massive compliance nightmare at tax time. Oh, and this is highly sensitive data we're talking about, so keep it locked down and secure. Steps 3 and 4 are pay and record. If you're dealing with a W-2 employee, they go strictly through the QuickBooks Payroll service. You pick the pay period, enter hours, check the tax calculations, and submit it on time. But if they're a contractor, you treat them just like a vendor. You enter their bills, track the payments in an appropriate expense account, and, this is super critical, you have to flag eligible payments for 1099 tracking. Just cutting a check to a contractor in QuickBooks doesn't magically track it for a 1099. You have to go in and manually check those vendor settings yourself. The final step, step 5, is report. This is where you settle up with the government. For W-2 employees, employers usually have to file federal forms like the quarterly 941, the annual 940 for unemployment, and the year-end W-2s. Don't forget state and local reporting too. For contractors, if they meet the reporting requirements and the amounts you pay to hit the threshold for the year, you'll prepare and file Form 1099 NEC. Make sure you are hitting those strict IRS deadlines for both filing with the government and sending out recipient copies. Let's wrap up with common mistakes to avoid so you can keep your business perfectly compliant. Let's rapid fire some of the biggest risks out there. First off, as we established, never misclassify a worker just to save a few bucks. Second, we need to permanently retire the term 1099 employee. That is literally not a thing. They are either a 1099 contractor or a W-2 employee. Next, never run a contractor through your W-2 payroll process. They're completely separate systems. Also, don't sleep on state and local payroll rules. They can be wildly different from federal ones. And finally, never assume QuickBooks just handles all this automatically. It's a fantastic piece of software, but at the end of the day, you, the employer, are responsible for checking the data, paying the taxes, and hitting those deadlines. I'm going to leave you with a question to chew on. Does your current QuickBooks setup actually pass the control test for every single worker you've paid this year? I highly recommend auditing your vendor and employee lists today. Check that you've got those W-9s and W-4s securely on file, and verify that your payroll expenses and contractor liabilities are recorded correctly. Nailing this doesn't just keep you compliant, it gives you a crystal clear picture of your business's financial health. Thanks for hanging out with me for this explainer. Catch you next time.